Welcome, everyone. Glad to have you here. Today is Friday, March 16th, 2018, and welcome to your Market Watch. Now, what we're going to do is we're going to start the charts right here, and the first thing we're going to look at is is Bitstamp. Bitstamp, Bitcoin's had a rough couple of days, It's been down into the 7,000s, upper 7,000s, and right now it's just barely in the 8,000s, I don't think this is the big crash yet. I think the big crash is coming. But I'm kind of waiting for it. I'm thinking it could be pretty cheap Bitcoins just before the Fed has to reverse action and go back to quantitative easing. And I don't think they're going to call it quantitative easing. This time it's going to be more like a helicopter money sort of a situation where we're finally going to lose confidence in the dollar. And it's not the situation that's going to happen on the 26th of March with the Chinese that's going to destroy the dollar. That's not going to destroy the dollar. That's going to erode the dollar. That's going to hurt the dollar, but it's not going to destroy the dollar. What's going to destroy the dollar is when the Fed has to reverse what they're doing right now. And they're not going to do that until they run into a crisis. So a crisis is up and coming. This is directly ahead of us, is this crisis that the Fed's going to create. The more they tighten, the more we're heading toward the crisis, and the more they're going to tighten, the more they can get away with tightening. As long as they can get away with tightening, they're going to continue to tighten, and they're going to tighten more and more until they get caught with a crash. It almost happened. They come so close to having their crash. They had a 10% correction in the stock market, and they had to come running in with support to support the markets. Now, they've been tentative ever since then. They've been holding back a little bit. They want to tighten, but they're doing backdoor at the same time they're tightening, and they're trying to feel it out to see if they can do it. They're going to keep playing with this until they bring the house of cards down. It's just a matter of time now at this point. And when they do that, then they're going to reverse. They're going to try to reverse. They're going to try to throw everything in the reverse, and they're going to try to go back to some sort of monetary stimulus. When they do that, it's going to be game over. Confidence is going to finally be lost in the dollar, and we're going to see, because this dollar has been eroding for ages now. The Chinese have been working at it. The Russians have been working at the dollar. There's trade happening in things other than dollar, other than oil. The U.S. dollars used to be solely used for trading oil. Now they're using other things to trade for oil. And so this erosion is going to continue. And this is what supported the dollar. All these people out there for years said the dollar's not supported by anything at all. It says unbacked fiat currency. That's not really true. The dollar is supported and been supported by oil. It's been backed by oil. That's about to come to a stop. And when that comes to a stop, then the dollar really is not supported by anything at all. What's supporting it then at that point? Then it becomes a real fiat-based currency with no support, no oil behind it, no backing with oil. And so this is what's going on. We can see this detachment occurring. Now we can see the price of oil going up and down, and it doesn't really reflect in the dollar too much. This is a detachment because the dollar is becoming slowly detached from oil. And that used to be, there's a direct correlation. I did shows last year and the year before where I put charts on that showed the direct correlation, an inverse relationship between the dollar and oil. You know what? Bitcoin is just exploding right now at this second. Okay, just pow. Just in the last seconds, it went up like $150. There's a big red candle growing right here, right now, right this second. While I'm talking, let's focus in on this green candle. It's amazing green candle. Look at this. Pow. I love to see stuff like that. It's fun. Let's watch that. While I talk, let's watch that candle a little bit. Take it off. Boom. Just like that. What do you think of that, guys? Anyway, So I just did a show on cryptocurrency. Cryptocurrencies ultimately, the demise of the dollar, the demise of the world reserve currency is ultimately going to lead to an adoption of cryptocurrencies. I've done a lot of transactions in cryptocurrencies. Cryptocurrencies, they never fail. If you send somebody money with cryptocurrency, provided that you paste the address incorrectly. Now, here's the thing. The newer wallets are going to get it so you don't even have to paste an address. You're just going to click on the person's name. That's it. You're going to have all your wallet addresses stored in the back end of the wallet. The front end of the wallet's going to be much more user-friendly so that your grandma can send micro purchases. She can, her magazine she wants every week, she can pay a $10 purchase and buy the magazine or whatever, you know. And this is going to be great for cryptocurrencies. Dash is one of the ones that's leading they got a wallet that's coming out called the Evolution Wallet. It's going to be really great, supposedly. And other cryptocurrency companies are going to follow suit, and they're going to make easier wallets. And in the end, we're going to have our apps that's going to allow cryptocurrency to be much more user-friendly. That's going to help bring the world in to this market eventually down the line. But first, the dollar has to die. So now let's take a look at cryptocurrency market capitalizations real quick here. We're looking at $326 billion. Everything's in the red right now, but I think it's going to switch over to the green pretty darn quick because of those green candles I just saw. If that continues, all these numbers will switch green later today. You know, hurry out there and buy some of it before it switches too fast. I don't know. That's up to you guys. This is not investment advice, by the way. I was just kidding about that. Now, let's take a look at our oil price. 61.32. It's up a little bit. It's been rising a little bit. Like, look at these dips here. Look at the heavy trading on these dips on oil. Each time it dips, look at the heavy trading. Boom, 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 boom. 4 cases here. You get a dip, heavy trading, dip, heavy trading, dip, heavy trading, dip, heavy trading, right? And then it goes off to light trading again every time after the dip. And so it almost looks like a couple bottoms were put in right here and here. And now we're seeing a trend upwards again. That's almost what it looks like to me. But I can't see it going over, say 65 or 70 bucks because more wells will come online. Now we're going to take a look at the silver price. Silver price was doing pretty good earlier today, and now it's dipsy-doodling down. I hate to see it going down, but it's still up 2%. It's up 2 cents on the day, which is nothing much, you know. So it's not doing a lot today. Let's focus our chart in a little bit closer so we can see a little bit better. So this is what silver, today's the green line. It's a $16.36 right now. And today's the green line. It's right down exactly on what it was when it started today, and it looks like it's still dropping, so it's probably going to go into the red in just a minute. Bonds and rates. Here we go. Bonds and rates. We're looking at a little bit of a mixed bag. The 2-year is the yields have fell a little bit, but most of the yields are up just a little bit. The largest gain is on the 10-year. It's up 0.19%. To 2.84.3. It's range bound right now, and it's going to be range bound until the next Fed sale, until the next Fed let's see, that would be the end of March. This is going to be range bound until the end of March. I expect it's going to start to creep up at the end of March. Because they had such a good sale of treasuries in the last sale, $145 billion, and they all flew off the shelf. They were able to sell them like that. I don't know who they sold them to. They might have all bought them themselves, or they might have been sold half of them and bought half of them themselves, or they might have sold all of them out, you know. It doesn't really matter that much because they all sold. That's what really matters, is they sold them all. And so the effect that that's going to have is, in the short term, it's going to keep these bond yields down a little bit. I'm not going to rise so fast, but I'm still expecting it to encroach up close to 3%. 3.25% is the mark that I'm looking for the crash in the stock market on the U.S. 10-year, 3.25%. And so in April, I'm expecting it to make it up to just about 3%. I don't expect it to make it much higher than 3%. So I don't think it's going to make it up high enough in April to trigger the crash. I think we're going to have to wait 3 months later down the line, in August. Then I think it's going to make it up past the 3% and make it up closer to the 3.25% we're looking for the crash. So I think we're more than likely we're looking for the crash to come in August. This means that Bitcoin is going to heat up for a longer period of time than I was expecting, because I was expecting the crash in April. Now I'm expecting it more in August. And this is all down, the reason why the change is all down to such a good treasury market sale that they had. They sold so many, $145 billion worth of bonds, they were able to sell them all off. This is going to push things forward a little bit further. And what this is going to yield is it's going to yield a little bit longer period of time where Bitcoin could actually heat up a little bit more. So before Bitcoin crashes, because Bitcoin crash is going to be timed when the stock market crashes, the big crash of Bitcoin. This is what I'm expecting. I'm still expecting that. So if the big stock market crash occurs in August, then you get the big Bitcoin crash when the stock market crashes. So it could heat up. The Bitcoin market could actually heat up until August. The question is, will it make new highs? I'm going to get into some Litecoin, not Bitcoin, but some Litecoin, because I'm thinking that I'm going to try to find the bottom here in the price. I don't think that this is heating up just in the past minute or two. Let's go back and take a look and see what it's doing again. No, she curved off. She stopped going there. Look, see, I didn't expect that would be really that big of a situation, but it was exciting to watch when it was in this candle right here. You know, that big candle, the bigger one. Anyway, so now let's take a look at the U.S. dollar index, 90.15, and it's shooting upwards a little bit right this minute. But I don't expect that's going to go much of anywhere either, too much today. So now let's take a look at the Dow Jones Industrial Average. Has it started yet today? No, it hasn't. At its close, 10:32. It must be right on the edge of starting. Any minute. I'll just refresh the page. It must be just ready to start. There, it started. Like I say, I think it must have started. Just a minute. Let me refresh the page. Yeah, 22 points it's up. No, it's up 29 now. It has started. And it's at 24,903. It's up 29 points right now so far in the day. It's just getting going today. It just started about 2 or 3 minutes ago. So that's your markets for there. Let's just take a look at this article here. It says Moody's warns a deluge of retail bankruptcies is coming. And I'm going to tell you, I don't think this whole thing about the economy being strong and everything had everything to do with the stock market taking off. And the stock market took off from what's called irrational exuberance about Trump getting elected. And this was like a stock market boom that went upwards, you know, and this is what drove this whole talk about an economic recovery and everything. Okay, so let's just read a little bit of this before we close on the day. 2017 was a perfect storm for brick and mortar retailers who officially lost the war with Amazon and no less than 30 retail chains filed for bankruptcy in a year which CEOs of Urban Outfitters said the retail bubble has now burst. So here's a list of some companies that have all filed for Chapter 11. Chic Shoes, Fashion to Figure, Styles for Less, Toys R Us, there's a big one, Toys R Us, Aero Group International, Vitamin World, Perfume Mania, PK, True Religion, Cornerstone Apparel, I think that's a big one too, Cornerstone, AOK Enterprises, AOK Superstores, Rue 21, V&B Bacharach, LO Metro, Pawn America of Minnesota and Pawn America, Agent Provocateur, Payless Holdings, so that would be Payless Shoes. Payless Shoes is a big one, another big one. Gordman Stores, Gander Mountain, General Wireless Operations, that's Radio Shack. Radio Shack's a pretty big company. H.H. Gregg, Vanity Shop of Grand Forks, BCBG of Arizona, Michigan Sporting Goods Distributors, Eastern Outfitters, Marbles Holdings, The Wet Seal, Tanner Company, and Unlimited Stores. They're all out of business. According to the latest Moody's research report on the retail sector, the rating agency now forecasts at least 6 retail and apparel issuers defaulting over the next 12 months, with most of these occurring in the first half of the year. So, the retail apocalypse is not over. I think it's just beginning. I think we're heading into a deflationary funk that's going to cause the Federal Reserve to change course and change direction, and then we're going to be heading into a hyperinflation. So listen, thank you guys for listening. Like and subscribe, and we'll catch you in the next show. Bye-bye.